For more on Renren and what today's surge means for other upcoming social networking IPOs, we're joined by Lise Buyer from Palo Alto, California. Liz knows IPOs. She founded Class 5 Group, which helps companies that want to go public. She previously helped take Google public and was an investment banker for T. Rowe Price and Credit Suisse before that. Liz, welcome to Bloomberg West. So first of all, what's your reaction to this runaway day for Renren?
You know, it's always fun to see a stock take off. It means there's clearly enthusiasm, and it does sort of put a damper on all the folks who a year ago were arguing that the IPO market is dead. That said, day one is fun from a spectator sport perspective, but it doesn't really mean anything. It's how a business does over time that actually determines who will make money from an IPO and who will have had a fun day of speculation.
Now, is what's going on with Renren today as much about Facebook as it is about Renren?
You know, there was a great deal of publicity about Renren being the Facebook of China. Well, you put those two words together, Facebook and China, and you're on two of the biggest investing themes that are out there at the moment. So surely there was a tie-in, and many more probably domestic investors paid attention because of that. So yeah, social media is quite hot, and there aren't that many ways to play it so far. So here's a great way to catch on to two converging, fairly massive trends.
Liz, you raised a good point. One day does not tell you the whole story. There's still a lot of big question marks. But because of the fact that all those other companies that are in social networking are still private companies, here's a company that already has a very strong presence in the Chinese market, and the earnings potential is what everybody's so excited about. There's an argument that potentially the excitement today is not just a one-day thing, is it not?
Oh, sure. You know, some stocks take off from day one and continue to do incredibly well, and some don't. So it will cause great enthusiasm, particularly across venture capital firms across the country, to see a deal receive this warm a reception. But it's also just useful to remember that, Amazon.com traded down day one and the Globe.com took off. Where are they now?
Liz, there were other IPOs today, including Boingo and RPX. We're looking towards LinkedIn and Pandora actually listing their shares later this year. How do you think the IPO market is going to play out with potentially Facebook, Groupon, and Zynga coming out of the gate?
So I'm not going to comment on any of them in particular because they haven't actually happened yet. But again, we see investors looking at the IPO market in two ways. Either they're completely rejecting deals and those companies aren't getting public, or they're receiving relatively warm embraces. And that's ideal because it means the good companies are getting out, and some of the ones that need a little more time to season are perhaps going to wait a little longer. And that's not what we saw 10 years ago when anything could go public. So it's a very good sign. And surely there's a great deal of consumer, for lack of a better word, frenzy around Facebook and Zynga and to some extent LinkedIn. And that will probably show itself on the day they go. But it'll all depend on what else is going on in the market and where the pricing is.
Hey, Liz, I mentioned that the stock pop for Renren today was 40%, the difference between the IPO price and the first trade. What does that tell you? Obviously, the investment bankers always like to give the people who are participating in the IPO a nice pop, but that's a lot. That's more than double the average tech IPO over the last 5 years. What do you think about that?
You know, it's so hard to predict. The bankers can go out and talk to institutional investors and where are you interested and where aren't you interested. Without having any data, my guess is that a lot of the pop in a name like Renren came from the retail side, the individual investor. And that's just really hard to predict. We'll have a much better sense of what the bigger institutions want to pay for a stock like this as we look over the next 2 weeks.
Liz, do you think a pop like that is a sign of a bubble or not?
One by itself, no. A whole fleet of them, possibly. And again, to the point, Emily, that you made earlier, it really reflects what's the underlying valuation of the company. Should the stock have been traded that far up? The bankers didn't think so when they put the price range out there. The institutions to whom they spoke while they were getting ready to price this didn't think so. But today there was a bit of momentum. But look back a month and a half to Demand Media, right? You had a huge pop right away. It's given back 35% of that. So again, day one is fun to watch, but it's probably not appropriate to read too much into it in terms of what is the appropriate fundamental valuation on an ongoing basis.
It has been fun to watch. Lise Buyer of Class 5 Group, thanks so much for joining us from Palo Alto.
Thank you.